March 2nd, 2022, the ruble is in free fall, down 30% in 72 hours. Russian banks are locked out of the global payment system. ATMs across Moscow are running dry. Western media is declaring victory. Putin's economy is finished. The sanctions worked. Except they didn't. 2 years later, Russia's economy is growing faster than Germany's. The ruble is back to pre-war levels. Russian oil is flowing to Asia in record volumes. Paid for in yuan and rupees, not dollars. And here's the part that should terrify every American. 50 countries just watched the United States freeze $300 billion in Russian reserves with a single executive order, and they all came to the same conclusion. If Washington can do it to Russia, Washington can do it to anyone. So they're building alternatives, not tomorrow, not someday, right now. China's payment system processed $27 trillion last year, double what it handled in 2020. Central banks bought over 1,000 tons of gold in 2022, the highest in 50 years. Saudi Arabia, America's ally for 80 years, just started accepting yuan for oil. The petrodollar monopoly that lasted half a century is over. And the dollar's share of global reserves has collapsed from 71% to 58%. The fastest decline in recorded history. This isn't about Russia anymore. This is about what happens when you turn the global financial system into a weapon. Because there's a pattern here, a 5-stage pattern that has repeated 4 times in the last 110 years. Every single time a dominant power weaponizes the financial infrastructure it controls, the same thing happens. The targets survive, the neutrals panic, and the weapon destroys the wielder. Britain did this in 1914 and lost the pound's dominance by 1944, 30 years. America pulled the trigger in 2022. The clock is now ticking. And this time the collapse will be faster because the alternatives already exist, because technology moves at exponential speed, and because the rest of the world just watched $300 billion vanish and decided they will never let it happen to them. You're watching the end of dollar hegemony in real time, not through war, not through revolution, but through financial suicide. And the country that wins isn't the one with the biggest military. It's the one that stayed quiet, built the alternative, and waited for America to strangle its own golden goose. Let me take you back to February 26, 2022, 48 hours after Russian tanks rolled into Ukraine. The United States and European Union made an announcement that would reshape the global order. 7 major Russian banks were being cut off from SWIFT, the Society for Worldwide Interbank Financial Telecommunication. Now, if you don't know what SWIFT is, here's what matters. It's the messaging system that connects 11,000 banks in 200 countries, processing $5 trillion in transactions every single day. It's not a bank, it doesn't hold money, but it's the nervous system that lets Bank A in New York tell Bank B in Tokyo to move $1 million. Without SWIFT, you're cut off. No trade finance, no cross-border payments, economic isolation. The West called this the nuclear option, and the logic seemed airtight. Russia's banks couldn't function internationally. The ruble would collapse, trade would freeze, Putin would have to withdraw or face revolution. But here's what actually happened. The ruble crashed 30% in 2 days, yes. Russian stock market closed to prevent total meltdown, yes. But then Russia's central bank hiked interest rates to 20%, stopping the bleeding. Putin demanded Europe pay for gas in rubles, creating artificial demand, and within 3 months, the ruble recovered every single percentage point it lost. By late 2022, Russian trade was flowing again, just not through Western channels. Oil went to China and India. Payments settled in yuan, rupees, rubles. Russia's GDP, which the IMF predicted would contract 8%, actually grew 3.6% in 2024. Faster than the US, the sanctions were supposed to cripple Russia. Instead, they revealed something far more dangerous to American power. You don't need dollars or SWIFT to run an economy anymore, and every country watching understood the real message. The United States controls the financial system, and the United States will use that control as a weapon whenever it serves Washington's interests. Your reserves aren't safe, your access isn't guaranteed, your sovereignty is conditional. Now, before I show you how this backfires, and why the timeline says we have maybe 20 years before the dollar loses dominance entirely. You need to understand this isn't the first time this has happened. Financial weaponization has been tried 4 times in modern history. In every single time, the same 5-stage pattern played out like clockwork. The dominant power controls the system, weaponizes the system. The targets find alternatives, neutral countries start hedging their bets, and the weapon loses all its power. Let me show you the precedent, because this is where it gets chilling. 1914, Britain controlled global finance. The pound sterling was the reserve currency, holding 65% of international reserves. The City of London was the center of the world's financial system. When World War I began, Britain passed the Trading with the Enemy Act and did something unprecedented. It froze and seized the assets of German nationals and companies across the entire British Empire. Bank accounts, businesses, ships, property gone. Now, up until that point, war was war and finance was finance. Belligerents fought on battlefields but honored financial contracts. Britain shattered that norm, and the immediate effect on Germany was devastating, exactly as intended. But here's what Britain didn't anticipate. Neutral countries, countries not even involved in the war, watched this and learned a terrifying lesson. If Britain could seize German assets today, it could seize anyone's assets tomorrow during any conflict Britain deemed important enough. Your money in London wasn't actually yours unless Britain approved of your government. So what did they do? They diversified. They pulled reserves out of London. They moved money to New York, to Paris, to Zurich. They bought gold. The United States, still neutral at that point, became the massive beneficiary. By 1920, America held more gold than Britain. By 1925, New York was rivaling London as a financial center. By 1944, at Bretton Woods, the dollar formally replaced the pound as the world's reserve currency. 30 years from weaponization to replacement. Britain thought it was wielding ultimate leverage. What it actually did was teach the world to never trust British finance again. And British dominance never recovered. Fast forward to 1979. Iranian revolutionaries take American hostages in Tehran. President Carter responds by freezing $12 billion in Iranian assets held in U.S. banks. Now the justification was clear. Iran violated international law, Americans were in danger, pressure was needed. And tactically it worked. The hostage crisis eventually ended, partly due to that economic pressure. But strategically, it was a disaster, because oil-exporting countries, especially in OPEC, suddenly realized their dollar reserves held in New York could vanish with a phone call. Not through war, not through default, just an executive order. The president's signature, and your sovereign wealth is frozen. So OPEC diversified. Dollar holdings in reserves dropped from 85% in 1977 to 71% by 1991. Countries started holding more Deutschmarks, yen, gold. They opened accounts in London, Singapore, Zurich, anywhere but New York. The U.S. gained leverage over Iran but lost the trust of everyone else. And that 71% figure, that was the peak. The dollar's share of global reserves has been falling ever since. Then comes 2014. Russia annexes Crimea. The U.S. imposes targeted sanctions. Russian officials banned from the U.S. financial system, some banks restricted. But here's the critical detail. Russia wasn't cut off from SWIFT. The sanctions were just strong enough to make Russia angry, but not strong enough to force immediate collapse. And that gave Russia 8 years to prepare. From 2014 to 2022, Russia systematically de-dollarized. They slashed U.S. Treasury holdings from $130 billion down to $2 billion. They stockpiled gold, going from 1,000 tons to 2,300 tons. They built SPFS, their own version of SWIFT. They negotiated trade deals with China, India, and others to settle in local currencies instead of dollars. Putin said it openly in speeches. The dollar is a weapon, and Russia needed to be independent. Western analysts dismissed this as bluster. Russia's too integrated, they can't decouple, but Russia was dead serious. And when the hammer came down in 2022, Russia was ready. If the U.S. had done nothing in 2014 or gone straight to full sanctions, the outcome in 2022 might have been different. Instead, the U.S. chose the worst possible option: signal your intent, then give your adversary 8 years to build defenses. Which brings us to February 2022. SWIFT cutoff, $300 billion in reserves frozen. This was the big one, the nuclear option. And the immediate effects were brutal. Ruble crashed 30%, stock market froze, Russians lined up at ATMs. The West declared victory, but then Russia stabilized, and not just stabilized, adapted. Trade rerouted to Asia, payments switched to yuan and rupees. By 2023, Russia's economy was growing again. But here's the real damage, and this is the part that matters for America's future. Every country watching, especially China, India, Saudi Arabia, Brazil, saw exactly what happened. They saw $300 billion in reserves frozen because Russia crossed the United States. And they all asked the same question: what happens if we have a dispute with Washington tomorrow, over Taiwan, over trade, over anything? Could our reserves be frozen? Could we be cut off from SWIFT? And the answer, obviously, is yes. The precedent is set, the weapon exists, and Washington has shown it will use it. So what are they doing? Exactly what Britain's rivals did in 1914 and what OPEC did in 1979. They're building alternatives. And that is when the 5-stage pattern kicks into high gear. Stage 1, the dominant power controls the system. From 1973, when SWIFT launched, until 2022, the U.S. effectively controlled it. Not directly, SWIFT is based in Belgium, but because most transactions settle in dollars through New York banks, the U.S. has leverage. Treasury can sanction banks, the Fed can cut off dollar clearing, SWIFT cannot function without U.S. cooperation. That's control, and the dollar's dominance came from economic size, military power, and the fact that oil, the most critical commodity on Earth, was priced exclusively in dollars. This is the foundation. Stage 2, weaponize it. After 9/11, the U.S. started using financial sanctions aggressively. First against terrorist networks, then rogue states like Iran and North Korea, then Russia in 2014. Each escalation normalized financial warfare. By 2022, using SWIFT as a weapon seemed obvious. The infrastructure existed, the legal framework existed, the political will existed. So the U.S. pulled the trigger, cut Russia off, froze $300 billion in reserves, maximum pressure. Stage 3, the targets find alternatives. Russia couldn't use SWIFT, so Russia used SPFS, its domestic system. Russia couldn't settle in dollars, so Russia used yuan, rupees, rubles. Russia couldn't ship oil through normal channels, so Russia built a shadow fleet of tankers with obscured ownership. By 2024, 40% of Russian trade is in non-dollar currencies. Russia-China trade hit $240 billion in 2023, almost entirely in yuan and rubles. Russia-India trade, $65 billion, largely in rupees. Russia proved to the world that you can be cut off from the dollar SWIFT system and survive. That demonstration effect is the kill shot to dollar dominance. Stage 4, neutral countries hedge. This is the critical stage, and this is where we are right now. It's not just Russia finding workarounds, it's countries that aren't sanctioned but fear they could be someday. China saw what happened and accelerated de-dollarization. They reduced U.S. Treasury holdings from $1.3 trillion in 2013 to $700, and 75 billion by 2024. They've been buying gold at a record pace, officially holding over 2,200 tons, but estimates suggest it's closer to 4,000 tons. When you count unofficial reserves, they scaled up CIPS, the cross-border interbank payment system, from processing $12 trillion in 2020 to $27 trillion in 2023. That's more than double in 3 years. CIPS now connects over 1,400 financial institutions. In 110 countries, it settles in yuan. It's a direct competitor to SWIFT, and it's growing faster than SWIFT ever did. Then there's Saudi Arabia, America's ally for 80 years, the kingdom that built the petrodollar. In March 2023, Saudi Arabia announced it would accept yuan for oil sales to China. That is a 50-year monopoly breaking in real time. In December 2024, Saudi Arabia officially joined BRICS, the bloc explicitly designed to counter Western economic dominance. The UAE, another Gulf ally, is settling trade with India in rupees and dirhams, bypassing the dollar entirely. Brazil and Argentina are negotiating a common currency for bilateral trade. BRICS, now expanded to 9 members including Saudi Arabia, UAE, Iran, Egypt, and Ethiopia, is openly developing a shared payment system and discussing a common currency backed by commodities and gold. Even America's European allies are hedging. The EU developed INSTEX, an alternative payment mechanism initially for Iran but expandable to others. Japan and South Korea are increasing yuan holdings. Over 50 central banks are testing or implementing alternatives to reduce dollar and SWIFT dependence. None of this is because these countries hate America. It's because they saw $300 billion frozen with a single executive order. And they realized their reserves aren't actually safe. If it can happen to Russia, it can happen to anyone. Stage 5, the weapon loses power. This is where we are now and where we're heading. SWIFT is still dominant, but it's declining in relative terms. The dollar's share of global reserves has fallen from 71% in 1999 to 58% in 2024. That's a 13 percentage point drop, representing trillions of dollars in diversification. But more importantly, the dollar's share of international trade settlement, the actual transactions happening every day, is collapsing even faster. It's dropped from roughly 73% in 2022 to about 58% by 2024. That's a 15-point drop in 2 years. That is the fastest de-dollarization in recorded history. Meanwhile, CIPS processed 136 million messages in 2023, up from 91 million in 2022, 50% growth in 1 year. Russia's SBFS handles about 2 million messages per day domestically. India's Unified Payments Interface processed 12 billion transactions in 2024, and it's starting to go cross-border. The alternatives are scaling fast. And here's the key insight. The SWIFT weapon worked tactically in the short term. It hurt Russia. But strategically, it failed catastrophically because Russia survived, and now every potential target knows to prepare. The SWIFT weapon can never be used again with the same effectiveness. The targets expect it. The neutrals have built alternatives. The weapon is spent. Now let me show you the specific data that proves this isn't speculation. This is happening right now, in hard numbers. Russian trade data. In 2021, before the sanctions, 87% of Russian trade settled in dollars or euros. By 2024, only 60%. That means 40%, nearly half, is now in yuan, rubles, rupees, dirhams, anything but dollars. Russia-China trade, $240 billion, almost $0 involved. Russia-India, $65 billion, mostly rupees. Russia is the proof of concept. You can live outside the dollar system. China's CIPS. In 2020, CIPS processed about $12 trillion in payments for the full year. In 2023, $27 trillion, more than double in 3 years. CIPS now connects 1,400 institutions in 110 countries. It's not just a Chinese system anymore. It's a global alternative, and it's growing at exponential rates. Central bank gold purchases. This is the signal that trust in fiat currency is breaking. In 2022, central banks bought 1,136 tons of gold. In 2023, 1,082 tons. In 2024, over 1,000 tons again, 3 consecutive years above 1,000 tons, the highest sustained buying since the 1970s. Right before Bretton Woods collapsed, who's buying? China, Russia, Turkey, India, Poland, Singapore. These aren't random countries. These are nations converting dollar reserves into gold because gold can't be frozen by executive order. Gold is sovereign in a way dollars never can be. Bilateral currency swaps. China has swap agreements with over 40 countries worth $500 billion. These let countries settle trade in local currencies without touching dollars. Russia has swaps with China, India, Iran. India has them with UAE and Japan. Brazil and Argentina are negotiating a common currency. ASEAN nations are discussing local currency settlement for intra-regional trade. Every single one of these agreements is a direct attack on dollar necessity. Then there's the petrodollar, the foundation of dollar dominance for 50 years. Every barrel of oil sold anywhere on Earth was priced in dollars. That created structural, inescapable dollar demand. But in 2023 and 2024, that monopoly shattered. Saudi Arabia accepts yuan from China. Russia sells to India in rupees. UAE takes dirhams and yuan. Iran sells to China in yuan. Iraq is negotiating yuan pricing. The petrodollar isn't dead, but it's no longer a monopoly. And once the monopoly breaks, the advantage evaporates fast. BRICS expansion. In 2023, BRICS added 5 new members, going from 5 countries to 9. These 9 represent 45% of the global population, 36% of global GDP, and 42% of global oil production. At the Johannesburg summit, they announced they're developing a BRICS common currency backed by a basket of commodities: gold, oil, rare earths. It's not implemented yet, but the signal is unmistakable. Half the world's economy is building an alternative to the dollar system. Not someday, right now. The data is overwhelming. De-dollarization is not a future risk. It's the present reality. Every month, the dollar's reserve share drops. Every quarter, CIPS volume grows. Every year, more trade settles outside the dollar. The SWIFT weapon didn't just fail to stop Russia. It triggered a global flight from dollar dependence. And now the question is, how long does America have? We can estimate the timeline by looking at Britain. In 1914, Britain weaponized finance. In 1944, at Bretton Woods, the dollar replaced the pound, 30 years from weaponization to loss of dominance. Now, Britain also fought 2 world wars that devastated its economy, so the financial weaponization alone didn't destroy the pound. It was weaponization plus catastrophic wars plus economic collapse. The US isn't fighting world wars, and the economy is still the largest in the world. So maybe the decline will be slower, but here's the counterpoint. In 1914, building alternative payment systems took decades because everything was manual, physical, slow. In 2024, CIPS went from 12 trillion to 27 trillion in 3 years. Digital infrastructure scales exponentially. Technology accelerates everything, so the decline could actually be faster. My estimate, based on historical pattern and current acceleration, 15 to 25 years from 2022. That puts dollar reserve collapse somewhere between 2037 and 2047, not eliminated, but no longer dominant. The dollar might fall from 58% today to maybe 35 or 40% by 2040. Still significant, but not hegemonic. A multipolar currency world where the yuan holds 25%, the euro 20%, gold and others 15%. The trajectory is already locked in. From 1999 to 2024, the dollar's reserve share fell 13 percentage points over 25 years. At that rate, another 13 points gets us to 45% by 2049, but the rate is accelerating. The last 2 years saw a 4-point drop. If that pace continues or accelerates, we hit 45% by 2035. The timeline is 10 to 25 years, not centuries, not generations, 1 to 2 decades. And here's what that means in practical terms for every American. Right now, the U.S. runs a budget deficit of about $2 trillion a year. The U.S. imports $800 billion more than it exports every year. This is only possible because the world needs dollars for trade and reserves. Foreign central banks and investors buy U.S. Treasury bonds to get dollars, which lets the U.S. borrow trillions at low interest rates. The U.S. exports its inflation to the rest of the world. This is called exorbitant privilege, and it's the foundation of the American standard of living. But when the dollar's reserve share falls below 40%, that privilege evaporates. Foreign demand for treasuries collapses. Interest rates on U.S. debt spike. The government can't borrow $2 trillion a year anymore without triggering massive inflation or a debt crisis. The U.S. would be forced to actually balance its budget or face the kind of inflation that destroys savings, pensions, wages. The American lifestyle, which depends on consuming more than we produce and paying for it with printed currency, becomes unsustainable. This is the end of the free lunch. It doesn't happen overnight. It's a slow, grinding decline. Prices rise 5–10% a year. Interest rates stay elevated. Wages stagnate. The standard of living, which has been propped up by dollar dominance for 50 years, starts to fall. And the average American won't understand why. They'll blame inflation, blame the government, blame corporations. But the real cause will be this. In 2022, the United States weaponized the dollar. And the rest of the world decided they didn't want to be vulnerable to that weapon ever again. So who wins and who loses in this new world? China wins massively. China is the obvious successor to dollar dominance. Second largest economy, largest manufacturing base, largest trading nation. The yuan is rising as the dollar falls. CIPS is China's SWIFT. China holds thousands of tons of gold. Chinese payment companies, Alipay, WeChat Pay, provide infrastructure that rivals anything in the West. As the dollar declines, the yuan rises by default. China doesn't need to defeat the U.S. militarily. China just needs to wait for the U.S. to destroy its own advantages, which is exactly what's happening. Russia wins strategically. Russia's economy is smaller than China's, but Russia proved that you can survive being cut off from the Western financial system. That demonstration effect is priceless. Every country that feared U.S. financial power now knows there's an alternative. Russia didn't collapse. The sanctions didn't work. And Russia is now the center of an alternative economic bloc, tightly aligned with China, India, Iran, and others. Russia is no longer isolated. It's the core of a new system. BRICS nations win. Brazil, India, South Africa, and the new members, Saudi Arabia, UAE, Iran, Egypt, Ethiopia. They all benefit from a multipolar currency world. They're not trapped in dollar dependence anymore. They have leverage. They can play the US, China, and Europe against each other. India is the clearest example. India maintained relations with Russia despite US pressure. India bought Russian oil at massive discounts. India settled in rupees. And India faced zero serious consequences. That's the future for middle powers: more autonomy, less US control. Gold wins. When trust in fiat currency collapses, gold becomes the refuge. Central banks are buying at record rates. Gold can't be printed, can't be frozen, can't be sanctioned. It's the ultimate sovereignty hedge. Alternative payment systems win. CIPS, SBFS, India's UPI, Brazil's PIX. Any system that enables non-dollar, non-SWIFT transactions gains market share. Fintech companies in China, India, Russia benefit enormously from diversification away from Western infrastructure. Now who loses? The United States loses hegemony. Not immediately, not catastrophically, but gradually and irreversibly. Dollar reserve status is the foundation of American power. It enables deficit spending. It makes sanctions effective. It lets America live beyond its means. As dollar dominance fades, all those advantages disappear. The U.S. has to balance its budget. The U.S. military becomes unaffordable without unlimited borrowing. Living standards fall relative to the rest of the world. America doesn't become poor. America becomes normal. A large, rich country, but not the hyperpower. Europe loses alongside the U.S. Europe tied itself to the U.S. dollar system. Europe joined sanctions against Russia. Europe froze reserves, cut off SWIFT. This aligned Europe with Washington, but also tied Europe to dollar decline. The euro could have been an alternative, but Europe didn't pursue that. Instead, Europe followed U.S. leadership. As the dollar falls, the euro doesn't rise, the yuan does. Europe ends up economically subordinate to both the U.S. and China, the worst of both worlds. SWIFT loses relevance. It's a Belgian company, but it's perceived as a Western tool. As countries diversify, they reduce SWIFT usage. SWIFT won't disappear, but it becomes one option among many instead of the only option. And SWIFT's revenue is based on transaction volume. As that volume shifts to alternatives, the business model weakens. Dollar holders lose wealth. Anyone holding dollar assets, treasury bonds, cash, faces slow devaluation. Not hyperinflation, not overnight collapse, but steady 5 to 10% annual inflation as the dollar loses purchasing power. A bond paying 4% interest, but losing 7% to currency devaluation, is a guaranteed loss. Investors will flee, which accelerates the decline. American consumers lose purchasing power. The U.S. imports more than it exports by $800 billion a year. That's only sustainable because foreigners accept dollars. When they stop, the U.S. has to export more or import less. That means fewer goods, higher prices, lower living standards. The average American household, used to cheap imports from China, cheap oil, cheap everything, will see prices rise 20–30% over a decade. As the dollar loses status. The timeline is set. The SWIFT weapon was deployed in 2022. That triggered the 5-stage backfire. We're in stage 4 now, neutrals hedging. Stage 5, weapon loses power, is beginning. By 2030, the dollar's reserve share likely falls to 50%. By 2040, maybe 35 or 40. The U.S. will still have the largest single currency share, but not dominance. This is a multipolar currency world. And the United States will be weaker for it. Let me end with this. The SWIFT weapon looked devastating in February 2022. Russia cut off, reserves frozen, maximum pressure. But financial weapons are like nuclear weapons. You can only use them once. After that, everyone builds defenses. Russia built alternatives. China accelerated CIPS. BRICS expanded. The petrodollar broke. And now the SWIFT weapon is useless, because anyone the U.S. might target next has already prepared or is preparing right now. The U.S. could have maintained dollar dominance through economic strength, open trade, rule-based systems. Instead, the U.S. chose coercion, freeze assets, cut off payments, weaponize the system. It worked tactically against small countries, but against a large, resourceful country like Russia, it backfired. And the backfire is global. It's not just Russia leaving the dollar system, it's half the world. Britain weaponized finance in 1914, lost dominance by 1944, 30 years. The U.S. weaponized SWIFT in 2022. The pattern says the dollar loses dominance by 2042 to 2047. Maybe sooner because technology accelerates everything. This isn't a prediction. This is pattern recognition. Financial weapons always backfire. The dominant power thinks it's exercising leverage. What it's actually doing is teaching the world to root around it. And once the alternatives are built, the original system loses power. The SWIFT weapon destroyed SWIFT's monopoly. The dollar weapon is destroying dollar hegemony, and the country that benefits most is China. The patient rival that watched America dismantle its own empire. China didn't defeat the US. China didn't need to. America defeated itself by weaponizing the very tools that made it powerful. The 5 stages are complete. The US controlled the system, weaponized it against Russia. Russia found alternatives. 50+ countries are hedging, and now the weapon is losing power. This is the end of dollar hegemony, not with a bang but with a whimper, not through defeat but through suicide. The SWIFT weapon worked once, it will never work again. The world learned the lesson, and the lesson is this: build alternatives, diversify out of dollars, never be vulnerable to Washington again. The dollar will decline, the yuan will rise, the world will be multipolar. And the United States will be weaker, not because of Chinese aggression, because of American policy. The US had the golden goose and strangled it with sanctions. 20 years from now, historians will look back at February 2022 and say that was the moment American financial dominance ended. They just didn't realize it at the time.